So thank you guys for all being here. Thank you for sharing these intimate stories. You guys all missed it because you're not in the room, but that's okay. You're probably across the world somewhere. So today we're going to go through this idea of why do markets crash? It's such a simple idea, but for me, my journey of figuring all of this out has taken 20 years. And I feel like there's so much nuance around it that is worth sharing right now, especially with this whole Japanese yen carry trade thing playing out. And we've just had this waterfall sell-off in the markets, right? So it's beautiful that you shared the 2008 story. My journey around this started in 2008, right? I remember I was a wee little lad in university, um, just starting to get to grips with what reality actually is, right? Trying to figure out how I'm going to make it in the world. And 2008, everybody was saying the world crashed and collapsed and so many people lost their money. But I was looking around and I was like, what actually happened? Like everything is the same. Everybody seems to be going about their business the same. Who lost the money? How did they lose it? And why is this such a panic, right? So I started looking into what actually happened. And then you find out it had something to do with mortgage-backed securities, right? And then you dig a little deeper and it was like collateralized debt obligations. Okay, some kind of insurance contract that was on top of something else that they made up, which was mortgage-backed securities. Okay. And then I realized, wait, I don't know anything about anything, right? So then I was like, I have an idea. I'm in communications and culture, which is just an excuse to drink and party through university, right? Realistically, like nobody goes into that to actually get a good job, right? So I was like, I'm gonna go to my finance friends. They would know what all of this stuff is. I go to my finance friend, I'm like, hey, do you know what mortgage-backed securities are? And he's like, what the who the? And I was like, collateralized debt obligations? No. Derivatives. He's like, I know what derivatives are. And I was like, what are derivatives? And he explained it to me 3 times, but it wasn't English, right? He would say stuff and I'd be like, and all I could put together was, wait a minute, even this guy doesn't understand. So I asked him, I was like, don't they teach you all of this stuff? And he's like, no, they're just teaching us how to like click buttons and theories around how to manage money, but not to actually make money and how it all works, right? So then I was like, okay, well, somebody in the world has to know what's going on. So I go onto YouTube and I find this guy, Mark Maloney, I think his name is, and he was showing how the money game works. And it turned out money doesn't exist. Money doesn't exist. It's what we call money turned out to be just numbers somebody types into a screen, literally. And I was like, there's no way. There's no way that we're working for this thing called money and there's somebody just literally walking up to a computer and just goes, $1 billion. And then that just pops into existence? Like, absolutely not. I refuse to believe it. But as you dig down into it, it turns out, well, that was it, right? And then once I got to terms with the idea that money is debt, it really clicked because I was like, oh, but debt is something we just make up, right? Like if I say, can I please borrow X amount of money? And you go, yeah, 100%, here's a bunch of debt that's going to go on you. You just made it up in that contractual agreement, and that's what money is, right? But still, it didn't explain the details of why, like, what are these derivatives, was my question. I was like, everything has to do with these derivatives, right? So can we please do the big reveal? This is the secret. And I know last time you guys saw the same chart, but this chart has a lot to tell us, right? You can go on Google and type in all the money in the world 2022, right? And you'll find this chart. So this chart gives you the best understanding of what's going on now. So we're going to go in the big picture and then we're going to go into the details, right? What we call money is as real as these square blocks, right? Somebody just made up these blocks, somebody makes up the money, right? So this little block up here, which I can point at like this one, is how much Sam Bankman-Fried, scam Bankman-Fraud, it's kind of the same, right? That was his net worth at its peak. One of these squares is 100 billion US dollars. He was at about 25 billion US dollars, right? So this This is how much cryptocurrency it was at its peak, and it's basically the peak that we still have, right? At its peak, this is how much money or liquidity was inside of cryptocurrency, right? By the way, you'll love this. This is all the gold, right? If you took all the gold, this is the underground reserves, and this is all the gold in the world put together that we know of. We know a bunch of central banks are hiding gold, so on and so forth. But this is how much liquidity there is in the world, money there is in the world. This is what's expanding. When they're printing money, this is what keeps expanding, right? This, okay, starting from here, are the derivatives in the world. And when I saw this, I was like, wait a minute, hold on, back up. You're telling me there's that, the screen's full of oceans worth, this screen's full of water called liquidity in the, called all the money in the world. And then there's all of these derivatives that are made up on top of that money and assets. It doesn't make sense, right? So here's what's actually going on. Okay, first of all, I'll put this question around the room. Who prints the money in the world? We just went through it. It's not central banks. Central banks print about, I think, 3% of the money in the world. It's when they give that money to a bank, the bank takes that money and keeps like, that money ends up being supposed to be 1% of the total amount of cash that they're allowed to lend out. And then they give loans against that collateral that's sitting there. And they create 97% of the money in the world. Please check these numbers. Don't just trust me on it. But they literally create 97% of the money in the world. But the craziest part is when you take all the real estate and all the gold and all the commodities and everything, put it together, they have created 2 to 3 times, some people say 6 times as many bets backed by that original collateral. That's what all these derivatives are. So that's to say all the stocks, all the bonds, all the real estate, leveraged real estate, not wholly owned real estate, all the commodities have been used as collateral to make bets in a casino by the wealthy. And there's way more bets than there is stuff to actually use as collateral on those bets. And that's the reason why things keep collapsing. So what happened in 2008 was they took the US real estate sector, and some of those houses are owned by people who can really pay those loans. A lot of those houses were owned by people who couldn't pay those loans. So then they took the real estate, the loans from the real estate, and they turned it into this derivative called a mortgage-backed security, which was basically all of those loans that are the houses themselves turned into an investment vehicle. Now, when you take a serious investor and you tell them, like, you know, when they tell the Sheikh of Dubai that you're going to invest into the US real estate market, they would say, well, we'll invest, but how solid are those loans? How likely are the people to pay back those loans, right? So instead of just taking solid stuff, solid loans, and turning it into a financial product, welcome guys. It's okay, you're on Bali time. Don't worry, you flew in perfectly on Bali time. Welcome. They had taken the real estate and taken the bad loans and the good loans and chopped it up and made a nice champur mix of it and turned it into these things called mortgage-backed securities and sold them to investors, right? And over time, those investors became wary that these loans are going to go bad and they're going to lose their money. So then they had turned it into collateralized debt obligations and sold it to an insurance company who was putting insurance on it for in case the loans defaulted. So now it's a layer cake of shit. They've taken bad loans, turned it into a financial product and sold it to somebody, and then they take it and turn it into an insurance contract and sell it to somebody else. And when all of that unwound, good people lost their money because those good people's money was backing all of these bets that people are making, right? So there are these unwinds happening because people go borrow in one place and then they invest it into another place, and somebody ends up taking the risk without understanding what's happening, right? But even more than that, what this showed me was, okay, I started looking at this as the ocean, right? So this is the ocean. The derivative ocean has the most amount of nominal money in it, liquidity in it, right? This ocean is backed by, this is all the land that's backing it, the real estate that's backing it. This is all the stocks that's backing it. So now this little ocean and that little real estate ocean put together with the, even the money supply is technically bonds, so the bonds are backing it, right? And that turns into the effects that happen on this little puddle of liquidity, right? So the visualization that I like to use is there is the derivatives ocean, where whatever happens in the derivatives ocean has an effect on the smaller ocean, which is the bonds and real estate and asset ocean. Whatever happens in that ocean affects what happens in the sea, which is the stock market and risk assets. Whatever happens in the stock market then affects what happens in crypto, which is a puddle on the beach. And we're all staring at the puddle like, is this puddle gonna go up? You know, we're all just watching the puddle like, can't wait for the puddle to go up. And within the puddle, you know, you have Bitcoin. So you got like a glass of water in the puddle. And we're like, can't wait for my glass to go up. And then we're over here like buying these shit coins, which are like a molecule of water. And we're just watching a molecule like, can't wait for my molecule to go up. Right? But then if you just zoom out and stop staring at the puddle and you look at the ocean, you can tell a lot about what's going on. Right? So that is this idea that we're going to go through today of like, what is the ocean, how to watch it, where is it going, and how do we, you know, project or predict where it's going. So what just happened is the ocean, can we please? Thank you, sir. You're like the, you know, the magician's assistant that like puts stuff through. So what just happened? We were all hanging out. Crypto was supposed to go to the moon. And all of a sudden, somebody was carrying something in Japan. And then, that's what I heard, right? Somebody was carrying something in Japan. And then the markets went, whoop. The whole ocean went, and crypto dropped off of a cliff, everything dropped off of a cliff. So what happened was Japan's central bank had been printing money at such a low interest rate. I'm sorry, what did I? It's okay, brother. Japan's central bank had such low interest rates that they had been printing money for a very long period of time at basically free. It was like close to 1% that you could borrow money in Japan. And then you could take that money and convert it into dollars and go and buy a bunch of tech stocks that were making 18, 20. If you bought NVIDIA, it made some bananas number, right? So what people did is they went to Japan, borrowed a bunch of money, turned it into dollars, and put it into the tech market, right? But then a bunch of traders figured it out, and they were like, if we just attack the Japanese yen, we can make a lot of money. So they started betting against the Japanese yen. And the Japanese yen started to fall off of a cliff. And now the Japanese central bank has two choices. They can either continue to let their currency devalue to a point where their entire country gets destroyed, or they just raise the interest rates and make it a little bit more expensive to borrow the money, right? So what's happening is Japan has a low interest rate, cheap money. US has a high interest rates, expensive money. But if you take the money from here and put it here, you make 4.5%, right? So then the Japanese central bank, for like a split second, just raised the interest rates a little bit, and everybody panicked. And they're like, oh crap, they figured us out. We're gonna get screwed. Sell, 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 sell. And in that selling, it's not that Bitcoin, they're not looking at the price of Bitcoin or the price of gold or the price of anything. They're just saying, sell it all because I got to get my money back and I got to go pay these debts on in the Japanese yen, right? So that's the Japanese yen carry trade that was playing out. Now, we are in an era where these currency collapses are going to continue. So right now, about 50% of that carry trade has unwound. There's another 50% left. But now we have a catch-22 going on. So just stay with me here. The interest rates in the US are high, right? When the market panics happen, they usually drop the interest rate because they want to, save their markets from falling apart. But this carry trade that was happening because the interest rates in Japan are low and they're high in the US. Now, if the market panic is big enough and they drop the interest rate, that would basically make this trade even more unprofitable, which means more people would sell their stuff, which means it would make the market panic even worse. So that's the situation we're sitting in now, where we've had this first dip. If you had cash sitting on the side, like, I was that night, I was so pumped. I was just waiting. I've just been like, just wait. Something's gonna break, just wait. And then that night, that red candle sent things on discounts that I have not seen since COVID. And so you just wait for these panics, and when that thing happens, you just go, just buy as much as you can. But I still didn't buy as much as I could because there's still more cash to be left for this final panic to play out, right? But that, I don't. No. Okay, so how did I know it was going to happen at that very moment? Very good question, actually. I've learned to watch the ultra wealthy, right? So you can go onto Google and type in bar charts insider trading. Bar charts insider trading, right? And what it is it shows you exactly what the insiders are doing, the C-suite executives, the CEOs, the ultra wealthy, right? And I've been showing this to everybody where I was like, look, Bezos just dumped $4.5 billion in one go, dumped $4.5 billion of Amazon. He hasn't done that in a very long time. Jamie Dimon just sold JP Morgan for the first time ever. And you go down this list and you just see the who's who, Mr. Klein from Calvin Klein, the Walton family from Walmart, the this of the this and the that of the that. They were just dumping their own family jewels like nobody's business. And all the C-suites were doing it. Everybody's just dumping on the markets. So then, and this is like while Bitcoin's high, everybody thinks we're going to go to the moon, we're all going to get rich. And I'm like, wait, look at what they're doing. We're buying this stuff, they're dumping this stuff. So what do? We dump it. So that's why I sold everything back when Bitcoin, went up to 73, came back to 63. There's a lot of stuff I look at, but that one signal is a big signal, right? And then you just wait. Now, a big panic has to happen for this process to reset, and in that panic, buy it up. And now, how about this? Going forward, we're going to have an insane buying opportunity. None of this is financial advice. This is financial crystal ball, predictions. Just looking into the crystal ball. If this thesis plays out, I'll even do you one better. Between the middle of October and probably between the middle of November, surprise, there's going to be some crazy thing that's going to come out. Might be some cyber attack, might be some bird flu thing. Who knows? Who knows what it is going to be? But something's going to come out that's going to be the reason for this panic to play out. You're laughing. I know. I say this all the time. You're like, you hear this talk every day. Because honestly, doing all this research, I realized the events in the world are not uncoordinated. They're simply the market playing out in the real world, right? So this currency thing, there's still a bunch of it left to play out. It's very likely that there's going to be the next scariest thing that's sitting there is actually bad debts that companies have issued. They're called junk bonds. A lot of companies have gone out and issued a ton of debt because companies do the same thing that central banks do. They've issued a ton of debt that's terrible debt. And usually when these kind of panics hit, the next thing is those investors realize that there's some market panic that's coming, or they see this happening. So those junk debts unwinding, it would be a huge thing. At the same time, nobody's going back to work anymore and commercial real estate is no longer valuable. Therefore, the loans that those commercial real estate banks had taken 4 or 5 years ago are coming due, and the commercial real estate debt is going to unwind. That is going to happen within the next 6 months to a year. Then there was something else which I had on the list that I forgot. And at some point, this derivatives debt will unwind. Because what keeps happening is that every time it gets to a point where it's going to unwind, The central banks find an excuse to print a bunch of money and dump it into the markets and keep the game going further. But we are now getting to the end of that game. It can't be kept going forever. We're in the final countdown. So when that derivatives debt unwinds, there will be a process called the Great Taking. And this is not my conspiratorial tinfoil hat thesis. There's an actual book called The Great Taking that's written by an ex-hedge fund manager who got into an accident and God told him he needs to go tell this to people. And he wrote a free book at thegreattaking.com and made a documentary and shows you the legal precedent in the case law for this great taking process to play out. And I tried to disprove it, and I can't. Literally multi-billion-dollar entities from Europe questioned the Fed about it, and they said, yes, this is legal. And here's what it says. Here's what is legal case law. All these derivatives are backed by our stocks and our bonds and our leveraged real estate. And what we don't own stocks. We own something called a security entitlement. And the security entitlement says that when these derivatives unwind, you will be the last person who gets anything back. The owner of the derivatives will get your stocks. And at this point, you're probably like, what is this guy on about? How does he know? First of all, please read that book and try to disprove those things. Because in the Supreme Court case law, it literally says the protected class are the only people who are exempt from this. All of our stocks are kept inside of clearinghouses. It's called DTCC is the American one. Euroclear is the one in Europe. They are the actual owners of the stocks. Our name is not on those stocks. Our name is on a security entitlement. And those pools of stocks have been used as collateral to back a lot of all these derivatives. And in that unwind process, anything that is not self-custodied shall be taken. That is case law. And this protected class thing, it literally is in the case law. So then the lawyer goes, okay, so you're telling me, in this case was against JP Morgan. He said, so you're telling me JP Morgan is part of the protected class? And the judge said, well, clearly, yes, JP Morgan is part of the protected class. So that is going to be the biggest thing that happens. Now, is that happening tomorrow? Absolutely not. What's ahead of us is some kind of a panic, which is the greatest buying opportunity, the last one, I think, that's coming up. And after that is the greatest money printing cycle in history that the people who understand what's going on are going to crush it. But rather than just talk about it, let me show you. So first of all, before we even get there, if you're like, how come I've never heard any of this shit? I was thinking the same thing. I was watching all this stuff, and I'm like, you know, talking about, as I was talking about it, the most people were like, you're bananas. And this was in 2018. I was like, they're going to shut down the entire world. They're going to tell you to stay in your houses. And I was saying some crazier shit, which I can't say because of YouTube, but I will say after we stop recording. And people are like, you're bananas. You're bananas. You think they're going to shut down the entire world and take all the assets? And I was like, yep. And 6 days before COVID, I sold everything and I moved to Bali, and I was like, and now my friends were like, that was such a genius move. And I was like, yeah, because this is how the world actually works. And we just forgot that we were forced at gunpoint to stay at home and force inject ourselves with shit. Okay? So if any of this seems cuckoo, it's because Wall Street has all of this data. Wall Street has all of the money. Wall Street, London, bankers, whoever you want to call it, they have all of this data, they have all of this knowledge, and they have enough money to make stuff like this happen. Could it be that it's just randomly happening? Could be, but the likelihood is that these things are playing out because of the financial panics that are playing out. I know, at that point, usually like some part of the room like locks off, like, oh, he's one of those. I'm like, hey, listen, I'm not judging anybody, I'm just telling you my truth, and this is what I've found. Now, what specifically does Wall Street have that we don't have? What specific data do they use to trade that we don't? first of all, the thing they have are analysts that cost millions of dollars, right? They have analysis services that are half a million, million, some of them are 5 million a month because they have next level analysis. My mission has been to democratize this data and make sure that it's available to all the normal people, right? So can we please do the reveal again? So yeah, it's okay. So these are all the problems we just talked about. This is going to happen. This is going to maybe happens. Maybe it doesn't. Maybe I'm just a kook, right? So please take everything with a grain of salt. The solution is, first of all, understanding this dynamic. The markets go up because they print money. By they, I mean central banks and the money printers. Markets go down when they stop printing money. This thesis is called the Everything Code by Raoul Pal. He is one of the greatest minds. We're going to bring him here too, by the way. It was interesting. I was like, hey, I became one of the pro members because that's how you get a lot of this data. And I was like, I'm going to start the Bali chapter of Real Vision, right? So I sent him a thing. I was like, hey, we have this members club called Mandala Club, and we'd love to bring Raoul Pal here. And they're like, oh yeah, Mandala, like we have a partnership with them in Singapore. I was like a little girl. I was like, yeah, 100%. Of course we do. Of course we do. So like, how do we get him here? So it's going to be from September. We're going to start doing the Don't Fuck This Up talks. Mm-hmm. These ones are the Please Don't Mess This Up talks for the sweet people and the beginners. And then for the professionals, there's going to be Don't Fuck This Up. That's literally their own thesis. And that thesis is based around the idea called the Everything Code. And the Everything Code is super simple. It says the money printing pumps assets. And when you stop the money printing, assets drop. Now, an interesting thing he said was, he was like, and this blew my mind. He said, he was like, it's not that the printed money goes and buys the assets, right? In my mind, I was like, money gets printed, people go buy the assets, assets go up. He's like, yeah, that happens a bit, but that's actually not the reason why assets go up. He's like, just the printing of the money is inflating the monetary supply. So assets automatically reprice without even having to be bought, because a lot of them are bought with algorithms nowadays, right? And that blew my mind. That like, it's not the capital that has to flow all the way down to buy the asset, it just inflates. But this idea of Everything Code means as the liquidity, as the ocean goes up from the money printing, or the ocean actually expands from the derivatives being created, there are so many ways to expand the ocean beyond just money printing. It's called a shadow monetary base, but I'm not going to go, and these are not my kooky words, these are actual terms used to describe this. But the expansion of that monetary base, and that expands the monetary supply and the asset pool size, automatically makes the markets go up. Okay, so before I hurt everybody's head too much, here's how to see it. This is Bitcoin. Actually, I should do it here so people can actually see it. This is Bitcoin, this green and red line in logarithmic mode, right? This orange line is something called the ISM, which is a producers index survey. The ISM is the best representation of where the business cycle is. That's to say, is the world's economy on the up? Is it peaking or is it down, right? This is the simplest way for us to see which way assets are probably going to go. Now, this is the current condition of the economy. This isn't a future predicting version, but it correlates beautifully. This is the correlation between Bitcoin prices and crypto and asset prices in general and the ISM. It literally bottoms out almost right around the bottom of Bitcoin and crypto. It tops out almost perfectly with it. Same thing. This was your most terrifying crash. It was simply just caused by the business cycle going up and down. Right? This was COVID, which lines up perfectly with, or perfectly enough, with the actual market panic that happened during COVID. This way of thinking lets us know, okay, where is the world's economy? And it goes into cycles that are multi-year cycles, right? So where are we now? the business cycle is low. So actually, you asked like, how do I know the assets are going to drop? This was one of the big signals. Oh, I mean, that's the story. Like he's actually. You have to understand. No, she will tell you. I do nothing other than just watch markets. Like from morning until night. I'm a nerd. I'm like, she finally came into my life and she's like, you want to watch a show? And I was like, show? What is show? She's like, you know, there's restaurants right next to our house, right? I was like, really? What do people do there? She's like, they go out to eat there. And that was literally like a you know, a newborn going outside. But yeah, literally, I'm just sitting and watching markets. But that I'm being facetious. So like, in reality, you can see these things coming from miles away, right? It's not that I knew it was going to happen right then, but one, I had heard somebody. It was leading up, but like, look at this data. Look at this data. Doesn't it look suspicious? I'll show you what made me freak out and sell. Like I sold literally right here, right there. Because look at this data. For all of Bitcoin's history, it's correlated, right? Because it makes sense that the world's economy goes up. That's when money is rich. World's economy goes up because of printed money, and Bitcoin goes up alongside it, right? It makes perfect sense. And up, down, up, down. Okay, we're at the very bottom of the cycle. Bitcoin runs off on its own. That doesn't make sense to me. Okay, well then let's look at the liquidity here. This is, let's look at the liquidity. We haven't printed very much money until very recently when China started printing. We hadn't printed very much money. This is how much money needed to be printed for us to, you know, have that run that we had last time, right? We were here. COVID was the reason to print money. Bitcoin went to here. The money printing went from here to here. Okay, justifiable. We go to the moon. That's because the only thing that takes us to the moon is money printing, right? But this time around, we went from here to here. But crypto went from here to here. So it doesn't make sense. So at that point, I'm like, everything's off. Something's off. There isn't fuel in the jets, and everybody wants to go to the moon, but there's no fuel in the rockets, right? Where's the fuel? Something's off. I'm done. Make a bunch of money. I'm done. Sit on the sidelines. And then logically, what should happen, right? What should happen is the market corrects back. And in that, I don't know what it's going to look like, but it corrects back to a fair price. And all of these kind of, you know, miscorrelations go back. And in that process is where you would want to buy it, right? But as far as sitting there, yeah, like I'm a nerd. Yes, sir. But
So I just had a quick question. So it looks like ISM is low, which is what you're saying,
yeah,
but has it started to turn back up? Because it looks like it could go a lot deeper than where it is.
this is a great question. So this is where my thesis differed from Raoul Pal's thesis,
Right.
right? He was saying we're all good, and I'm going to show you the data. All the data looks like up and to the right, that the market, the business cycle has bottomed. We're ready for the liquidity. Liquidity is going to come. They all have to print. So he was like, it looks like it's going to go higher. My tinfoil thesis said we are in a volatile time of history, which means, you know, we have great upside volatility, but great downside volatility, very sharp spikes. And then just looking back, look at what happened last time. It started to turn up, everything looked great, and then the whole world gets shut down, right? And they're discounting that thesis because they're probabilistic, you know, investors. They're also investing with like sovereign wealth funds and hedge funds, right? So they're not always like waiting for some meltdown to happen. Yes, to answer your question, I think this is coming. Pardon? Yeah, exactly. And his thesis is also a longer term thesis, right? He has a 10-year time horizon. He's right that like in this panic, the only thing to do is buy more. And I totally agree with that. But my thing is we don't have, you know, $100 million like him. So like you, Kabir. Don't lie, it's okay. You know, we don't.
So that next dip is what you were saying earlier, which you're kind of expecting is going to come in between, I think you said October, November,
right. So
something
potentially,
more or less. Yeah.
potentially. But I've also learned to not just depend on my thesis because there's a 50% chance that I could be wrong. So in this, Japanese yen spike down, we saw that many of the assets, like specifically Atom Dot and Matic, which are fantastic assets as far as I can see, dip down, turn off some of these lines, dip down to this green line, which was all the way back to COVID prices. So I just made a buy there, and they're up a certain amount, right? Atom, COVID, Matic, COVID. At this point, everything is COVID. I bought some COVID. No, I just nailed it. I made 25% on the COVID. Like, Atom, Matic went down to like 2021 prices. Fantastic. I don't think it goes any lower. And DOT went back to literally its launch prices, right? So those get bought up now because it's such a discount. And then Bitcoin is still at close to its all-time high, so not at a discount. Ethereum, relatively high. So actually, the way that I also look at this is an algorithm called LuxAlgo. It gives a kind of a more clarified perspective on things. So this is expensive, fair price, cheap, according to this algorithm, of course. Near, cheap enough. Bitcoin, more expensive than fair priced. Ethereum, below its fair price, bouncing up against the fair price. But the other ones, cheap, 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 right? So my thing is I just bought the panic because it was one of the biggest panics that we've had, and the amount of fear that we had in the markets went all the way back to levels that we had not seen since COVID and the 2008 crisis, which is all the way back here. And when you get that kind of opportunity, just buy it. Now, do I get another one of these opportunities? Most likely, because these kind of panics, they trigger the waterfall aspect of things. The wealthy are still dumping assets. They still haven't started buying them. The ISM is now turning down and Bitcoin is still high. There's a gap in between. Liquidity has started up a little bit, but it really hasn't kicked off properly. So all of that put together means I keep a little bit of cash on the side to buy. The October to November timeline is from a methodology of analysis called cyclical analysis, which, if you want to know the person, his name is Slim, Ask Slim on YouTube. It's this old trader, 50 years in the game, and he does this cyclical analysis. And over my years of crypto, I have watched the people who were right, and the right people were Slim for cyclical analysis, Raul Paul for the big vision and liquidity, and of course this very expensive data, Crypto Crew University for the charts, and Garrett Soloway for the kind of broader economic thesis. All of them were right in the past, so I listened to that, right? Now, the ISM is where the market is today. But investors don't invest in where the market is today. Investors invest in where the market will be in 9 months, in 18 months, and down the road, right? So how do we look at that? What data do they have? Does Wall Street have that we don't have? Firstly, this. This is literally the global liquidity. And the global liquidity has been increasing at a rate of about 8% per year. That means they're printing 8% of the money per year. Inflation is at about 2 to 4%, depending on which country you live in. We here are closer to 2%, some places are 4%, some places are higher, they're completely melting down. But the idea is that, okay, if they're stealing my money at 8% per year, and inflation is, let's say, 2%, that means I have to make 10% per year just to break even. Guess how much stocks make? 10%. So that means stocks in real purchasing power are just breaking even, right? Bitcoin is outperforming that. Let me just say this. Bitcoin has been outperforming that monetary inflation, but it's done millions of percent. over the last 13 years, comparatively, right? Will it do that going forward? I am not fully convinced, especially for the next 4-ish years. And that's a whole different thesis. I'll explain to you sometime later. A lot of people get very angry on YouTube when I say stuff like that, but Bitcoin has, in history, outperformed that by millions of percent. Tech stocks have outperformed that by hundreds of percent, right? So if you just go and buy the S&P 500, you're making about 10% a year, which means you're just staying in the same place. Tech stocks have outperformed that, which means you're making money, but then there's also more volatility along the way, right? Now, looking forward, we can see how much money they have to print. This was the real light bulb for me. So I was like, okay, wait a minute. So markets go up because they print money. They print money because they have debts to pay. And if I have debts to pay and I can print money, I will just keep printing more and more money. So then the data these guys use is they look at how many debts do they have to pay. And debts are always, you can see them a few years ahead of time because they borrow and then years later you have to pay it. So this red line is how much, it's a representation of how much debt the Fed has taken, but it's basically how much interest the Federal Reserve is going to need to pay on their debts going forward. Verifiable, right? Surprise, surprise, this is how much money they print, or at least put it onto their own balance sheet to pay their own debts, right? Now, is it a perfect correlation? No. There are times where the money on the balance sheet starts to draw down, and then something happens, surprisingly right on cue, and it's used as the excuse to print a bunch of money and start, and this was the crypto bull run. The crypto bull run was from here to here. And the crypto bear market was from here to here. And just this little uptick was the recent Bitcoin came back to life, right? But so when I saw this data, I went into the community and I was like, okay, wait a minute. And this data keeps going, right? And the bigger charts, I went to the guys and I was like, sorry, I must be an idiot because this data is telling me that they're going to have to print the entire world's dollar supply this next time around. The US is, and then the euro, they're going to have to basically double the euro supply, double the dollar supply, double the real supply, everything. Is that true? And they were like, yeah, all of our data is showing that something has to happen for them to print the entire world's money again. One side of me was like, oh my God, bye. Right? I got so excited. The crypto head part of me got so excited. But the human part of me got like terrified. Because I was like, wait a minute. So like, just to print like this much money, they have to shut down the entire world? What do they have to do to find an excuse to print that much money? Right? That's why I'm now saying this stuff. I've started to look out for these attack vectors of like, what's on the horizon? And in this journey of learning about all this stuff, if you should really watch Changing World Order by Ray Dalio, and his book is fantastic, right? Because he has done millions of dollars of analysis of history to try to figure out how do we predict things that are going to happen going forward. And they found everything is predictable because it just plays out like history, right? These are cycles that play out. And so, a long story short, we are in World War III. I mean, that's no surprise to most people. The world is going into the state that we were in World War II. And if everything's tied to finances, we're in World War III. There's also a great book called 5GW, Fifth Generation Warfare, that really highlights the different modalities that are playing out right now in the next generation of warfare. And in all of these things, the thing that happens is war, total global war. But this time around, total global war doesn't look like it used to. It isn't just bombs dropping in places. It's TikToks dropping. China has a different TikTok in China that only works for certain hours in the day and only for certain ages. And it mainly shows like engineering videos and great things. And they have a different TikTok for us where we're just doing this. Literally, this is gonna be on social media here. Just it's. I mean, and when you look at the fifth generation warfare methodology, it is a psychological method to attack the next generation if that's playing out. You know, we are hooked to these things. They control us. People are scared of AI running the world. Do you realize AI probably brought you here? AI will tell you when your next meeting is. AI will tell you which road to go on. AI will tell you which thing to look at. AI will tell you which posts you will see and which ones you won't see. AI will make sure that you're everything. When you search something, guess who's answering? So everything you know, everything you see, everything we do is already controlled by AI. I digress. A lot of money printing coming. I don't know why, but usually this much money gets printed because of war. Now, if it happens or not, he said something really important, Raul did, that hits deep. He always goes, look, maybe the world's going to be taken over by AI, maybe it's not. Maybe it's going to be war, maybe it's not. Why don't we just get rich from it? That's sadly, money is the solution to solve the biggest challenges in the world. No matter what mission you're on, unless you have the money to actually implement those solutions, that's the sad reality of the world. So we have this final opportunity. Like they say, we have 6 years to make as much money as we can. Because on the other side is a world where instead of people, robots work. Instead of minds, artificial intelligences run things. Instead of, this whole economic system that exists, there's this entire world with infinite productivity, with so much money being printed that earning money as a concept disappears. But also a world of infinite abundance. Where humans are no longer beholden to be slaves and work for things that they don't need to work for, right? So there's a balance coming. And that's a world where those robots are not going to be sending SWIFT transfers to each other's banks and waiting 5 days, right? And then having questions around like, Mr. Robot, can you prove your identity, please? Can you beepity bop into our bank and prove that this money is yours? Like, that is not how they're going to operate. They're going to use a technology called blockchain and digital assets to transact behind smart contracts. And the world will be automated and run in this reality. So that's what we're doing. That's what we're doing with crypto. What this crypto thing, first of all, I've said this before and I'll say it again because it pisses off a lot of people, but it really hits deep. It's a technology called blockchain. It is not here to give us freedom. It's definitely not here to give us freedom. People thought Bitcoin gives privacy. A public ledger where all your transactions are visible gives us privacy. A technology called blockchain where we take money and digitize it. We're all scared of central bank digital currencies, but we have USDC, which is a private central bank digital currency, and USDT. And it's made by a guy named Satoshi Nakamoto, right? Satoshi means wisdom or intelligence in Japanese. And Nakamoto means central, the ones who live in the center of Japan. So Intelligence Central made a technology called blockchain that we bring in to give us freedom. You remember the last time this happened? It was called the net and the web. Nets and webs were going to give us a lot of freedom. Remember? I remember I was like in my diapers. I was like, yeah, can't wait. We're all getting torrents, like freedom of speech. Yeah, 40 seconds. All they had to do to get rid of torrents and all this freedom was give me $12 Netflix. Even I was like, convenience. Freedom or convenience? Come on, you know which one we take. There's no freedom stores. There's only convenience stores, right? That's how it works in reality. So anyways, you guys keep pulling me down the thing. Okay, so okay, so Sim, but aren't you the crypto guy? That's always the question. Like, you're telling us all this stuff. Aren't you the crypto guy that tells people to get into crypto? Yes, because we are leaving an old world, a burning ship called a dollar-based world, which is dollar's going to kill all of the currencies as it's already done. If you've held euros over the last few years, you know what that means. Or, pick your currency. We have to leave that ship and we have to invest in this new space where money as a concept is changing, and it is going to be the frameworks that this future society runs on. And in order for that transition to happen, insane amounts of money has to be printed. And then whoever decides to get onto the other side and actually gets to this technical money world wins out simply because they took the risk ahead of time. Okay? So in simple terms, the solution is we invest in the new internet. Because as we saw, real estate does not make money. Most people think real estate makes money. It does not make money. The data actually shows that real estate loses money. Now, I'm not saying all real estate. Global real estate averaged out has not made money. It's actually lost purchasing power. If you were in Bali and you have real estate, standing ovation, okay, because you crushed it. Tech stocks make money because technology is the future, and that's why they keep doing all of this stuff. Blockchain makes money because it is the future of the internet, but 90% of it's a scam. 10% of them are solid projects. Out of the 10%, 90% will fail because that's just how the law of startups works. But the 1% that remain are going to be the base layer of this future world that we're moving into. So, action steps. Yes, sir. Always. If I can find it, yeah.
So according to this model, they're going to print money. But what happens if they don't?
The whole world melts down.
Well, you can't refinance it.
But so here's what would happen if they don't print money.
But it's a possibility.
Oh
I'm
yeah,
just curious. I want to understand how.
It's definitely a possibility, right? Like, look at here. The debts were going up. Interest rates were going up. They had some money on the balance sheet, and they didn't print, and they left it, right? And they can do that for a very long period of time. But what happens in that time is the world's economy slows down and grinds to a halt, like it's happening now.
There's no more motion.
There's no velocity of money. People stop spending. Everybody tightens up. Look at what's going on in the world today, right? Everybody's tightened their wallets. And if you think you're alone in this whole thing, you're not. Everybody's tightened their wallets. People have started spending less. Tourism has gone down. Business revenue has gone down. You're probably not getting clients if you have clients. You're seeing that, right? So if they don't print money, which they probably won't for as long as possible to cause the most amount of pain, that is the other secret. Central banks are not our friends. They are not here to help us. They are not here to get rid of inflation, everything that people tell us. They're here to cause, they will probably not print for long enough time to cause the most amount of pain. And this data is outdated. Technically, we're all the way, it's hard for me to see, but it's like we're all the way out here. We're like right there, and they still haven't printed money, right? And they will probably continue to do that because they need an excuse to print money as well, right? They can't just print a bunch of money when everything's fine. Then we get angry. That was the bailouts. 2008 happened and there were bailouts, and guess what happened? Occupy Wall Street. We all went out into the streets. How dare you print money and give it to the bankers? But during COVID, you couldn't even occupy Wall Street. You could just occupy your couch, right? So the same thing's going to happen going forward. But if they were to just not print money, then the US dollar defaults because they have to pay their debts. And if they don't pay their debts, the US defaults. If the US defaults, all the currencies that are attached to the dollar melt down. And all the currencies in the world are tied to the US dollar, which means the entire world melts down, which means the money system completely falls apart.
Total chaos.
Total chaos. And see, the thing is this. If they don't print money, total chaos. If they print that much money, utter chaos. Utter chaos.
Later.
Pardon?
Delayed. But later.
Yes. So now the most likely thesis in this process is that the money printing starts sometime. Money printing's already started, by the way. Like, We can see it live, remember? We can see the liquidity in the world. And the thing is, they also don't just print money like super obviously, right? This is the liquidity index, global liquidity index. This is when, or not even that, right here, right there, is effectively when China started printing money. No, right there is when China started printing money. At the same time that this carry trade is unwinding, right? So Japan is pulling away money, China's printing money. They've already started. China starts printing first. And this time around, different central banks are printing at different times. But what really matters is when the Fed prints, right? So now, here's the easiest trade to make that is so obvious that it's hilarious. The Federal Reserve's rates are high. When they drop rates, markets crash 100% of the time because they drop rates because there's some kind of panic. When they drop rates, I will buy that hand over fist. If you have Bitcoin, I will use my Bitcoin to buy riskier assets at that point. If you have other stuff, I would transition a lot of that going forward. Now, is it likely that they drop rates in the October timeline? Who knows, maybe. But the moment they do, that's the moment that I buy up all of this stuff. And then on the other side is the greatest spike in assets that we've seen in history. In history. It is, it's always hard.
I'm totally with you. I feel you. I get it. Because the implications are mind-boggling.
So this is a really good point. Can you please? It's done? Oh yeah, it's off. It's off. Thank you. It's because this has never happened in our lifetime, in any of our lifetimes. The people whose lifetime this happened in were alive in 1930, in 1929. And that was when everything was great, and then it got greater, and then there was just this insane parabolic spike in asset prices. And then there was the 1929 collapse. And then in 1933, I believe, the US literally took all the gold from its own citizens at gunpoint, made it illegal to own gold because the gold was what was backing the derivatives contract at that time, and they confiscated all the collateral called gold. And then the US did it again in 1971. They did it to the entire world. They had the entire world's gold, and they just went, sorry, we're not going to give you back your gold. And it's because they have the guns, they did it, right? So 1971, some people remember. 1933, we have all forgotten. So that's why it's so unfathomable, right? But just looking at history, you realize, okay, who were the winners at that time? The winners were the ones who took all of this cash, all of this paper money, and converted it into valuable assets that were actually the future, right? At that point, even today, like real estate, gold, all self-custodied, wholly owned real estate, gold, land, like farming land, commodities, water, those are solid assets that will always go up in value. Digital assets in my world are the best because they're liquid and you can actually take them wherever you like, right? And it should be unfathomable. If it was so believable, everybody would be doing it. And then just know this, when that panic comes, when the next panic comes, do not panic. It's the greatest opportunity that we're ever going to have in history because, first of all, this is what the wealthy are doing. That's simple. This data is $80,000 a year from one of the places. And the second one is $80,000 a year. I'm not that rich. You can also get it through Real Vision's Pro membership. And Raul actually takes this data, and once in a while, this was the data that he publicly gave in one of the YouTube videos. So following this data is what the wealthy are doing, and they're wealthy for a reason, right? So let's do as they're doing. But even more than that, all throughout history, there are these very specific moments in history where everything is rebuilt. All the brokenness of the world, all the things you see wrong with the world, we have the potential to rebuild all of it. It's not going to look the way that it used to, but we have the potential to rebuild all of it. And within the next 6 years, the vast majority of that will be rebuilt. And we're working with Gibran and the presidents and everybody to rebuild the infrastructure of the country to make that happen. And we have the potential to build systems where all of this inequality that exists in the world can be made more fair, more equal. The average person has, for the first time in history, the average person has had the opportunity to make a bet before Wall Street. We got to crypto first, to Bitcoin, all these things first, and the opportunity still exists in the world. But even more than that, we have the opportunity to build this new, beautiful world. Everybody in Ubud likes to talk about New Earth, right? You don't build the new Earth, you live the new Earth. Look at it. It's beautiful. This is a new way of living. You can live here, you can live there. You can literally take blockchain and implement it in charity. Blockchain is being used, and these technologies are being used to monetize the protection of nature. Yes, on one side, that it gives the ability to take control of nature, but on the other side, monetize the protection of nature. There's 1,000 different ways of building that new world. They don't exist yet, and you have the opportunity to do it. Or at the least understand it and approach it with a state of love instead of a state of fear. Because if we just fear that, if the good people all fear this stuff, then we know who gets all the control. And if the good people can actually lean into it, then hopefully a brighter, more beautiful future gets created. And I wore this watch for no reason, and I've talked too much. Thank you so much. I really appreciate it.